I am Brignac, and I have ProTradeFx as my channel name, and I've pretty been following up on other meetings, and I'm sure a lot of speakers, giving insight to the basics of forex trading and things you need to know. So this is more like a technical perspective of forex trading, and there is a saying, even as a Christian, it says, "If your foundation is what is bad, what shall the righteous do?" Everything lies on your foundation. So while we wait for, Mr. John to come in, I'll just, try to go around and come back to what you are here for. So, the foundation is so, so important as a forex trader. When you have a very bad foundation, trust me, every other thing you get it wrong. You'll get it wrong. When your foundation coming to forex trading isn't sound enough, you will make so many mistakes before you find yourself in the right position. Which means if you digest bad informations before coming into the right informations, you have the mentality that the bad information you have is good, even though there are other people that would see that information and know that this information is bad. But to you, because you are consuming it firsthand, you wouldn't be able to, you know, uh, you won't be able to differentiate a bad information from a good information. So there are bad information out there, and there's also good information. Just like we have so many things that surrounds forex trading, and I'm pretty sure the speakers that we've had in previous sessions had made a lot of explanations into the basics of trading, the risk management, the this and that and that. Yeah, these are very significant things to consider. So I'm going to also have to go back into strategy, technical analysis. Yeah, what is technical? What is technical analysis? Uh, Before we go into that, I want to make sure I'm communicating with those who understand my languages. I believe everyone understands what I'm speaking and how I speak. I believe everyone does that. Do you understand the way I speak and how I speak? Can you hear me clearly? And
Yeah,
are we speaking the
yeah,
same language?
yeah, sure.
Okay, okay. I believe you were in the first session, the second class. This is the fourth class, and I want Mr. J to do the introduction before I proceed. Mr. J, if you're here.
Yes, yes. Hello, everyone. I don't know if I'm audible.
Yes, you are.
Yeah, sorry about my delay. I had to confirm something. Welcome, everyone. Welcome to today's section. Today we'll go into the presentation. Basically, I believe you must have gotten a lot of insights from what Pro Trade has to say and what he said earlier. But if you're just coming in, I see we have a lot of participants already in the house. Welcome, everyone, to today's section. All right, today is the official day 4 as we speak on in the introduction to technical analysis. So for those of you who don't know our guests, he's ProTrade by name. The name of his platform is ProTradeFx. He's available on YouTube, available on Telegram, available on Instagram, basically everywhere on the net. And he's very famous for his method in smart money concept and also very good in his craft. So for those of you who don't know him, or for those of you who might have been meeting him for the first time, just know you're having an opportunity to meet somebody who is an idol to many, a mentor to many, and also a guidance to many upcoming traders as well. So he'll be taking us on today's section where we look into the importance of technical analysis, how technical analysis works, the role of technical analysis in trading, and how you should actually be using technical analysis. Because this is an issue we have in the space. We also have individuals who think technical analysis is everything. And once you know the method you want to use, you know your edge in technical analysis, that is everything. And I believe from the previous classes, you must have understood that it's not all about technical analysis. The word edge itself goes into how strategic you are, how psychological you are, and how much you understand within the aspect of technical analysis. So on that aspect, we decided to dedicate a day itself to talking about technical analysis and having an experienced guest with this particular topic look into it for us in a general scale, and also to give us insights to what we should use technical analysis generally for. So without wasting much time, I would like him to get into the space. For those of you who are just coming in, please, if you have any question, you can use the chat box. I believe Rex is here to follow up in case he asks questions, to make sure that everybody is following up. Rex, you can unmute your microphone to, keep company with everything.
Yeah, I can hear you, boss.
All right, nice. So let's get into today's class, and hopefully everyone is ready to, be blessed. Thank you. ProTrade, over to you.
Okay. I believe you can see my screen, right? Chat.
Yes,
Yeah.
yes, I can see your presentation.
Okay. So we won't waste much time. We just go straight into what technical analysis is, because a lot of people, right there as a trader, you should know what technical is, right? So technical analysis is more like the type of analysis we do that gives us an edge in how to get into the market. It's not even understanding the market. No, it's how to get into the market. How do you get in the market? How do you get out? So that is your technical analysis. It tells you, traders make informed decisions. If we look at here, I said the role of technical analysis in Forex trading is to help traders make informed decisions about when to enter or exit trades based on historical price data, chart patterns, and indicators, rather than economic news or company fundamentals. So what this company fundamentals means, micro and micro data, which is macro and micro data. Those are what your company fundamentals is. Because in trading, we have different type of analysis. We have the technical analysis, we have the sentiment analysis, and we have the fundamental analysis. So we don't want to dive too deep in other analysis. We're talking about technical analysis. Technical analysis can be anything that you understand that helps you to get into trade and out of the trade. So it could be your chart patterns, it could be your indicators, it could be anything that makes you convinced that this is the right time to get in and out of the trade. So aside the fact that you know what Forex trading is all about, it's about buying and selling. Now the question is, how do you get into that business of buying and selling? How do you buy? How do you sell? When do you buy? When do you sell? That is what technical does for you. It helps you to predict, right? Helps you to predict when you should be in a position to hold a trade, or when it should be out of the trade, or when you can't do anything, right? So coming down to, if there's a broad knowledge about technical analysis, what are the first things I need to do as a trader? You need, number one, which is what we have in this pyramid here. The first thing you need to do is define. Is what? Define. Please, if you are with me, type define on the chat box. Define. Define your trading goals. If you are with me here, type define on the chat box. I want to make sure everyone is with me. If you are with me here, type define on the chat. Define. So we said technical analysis is a broad aspect of trading. How does it help you to be in the best position to trade or to be a better trader? And the first thing you do is you define the type of technical analysis you want to use, right? How do you define? It means you define your trading goals and strategy. The first thing now in technical analysis, aside the trading goals, the first most important thing is understanding the strategies that lines up with the technical analysis. What is technical analysis? Is just, the whole drawings and the whole things you interpret on the chart. Now you have to define the strategies that lines up with the technical analysis. You want to make decisions based on what you had to do in the market, either you want to buy or sell, but you need what we call a strategy. So the technical analysis is more like a bigger name for how you analyze price action. Now the strategy is more like a simplified version of, we have an umbrella. The umbrella is the technical analysis. The entity holding the umbrella is the strategy. So you don't want to sit under the umbrella of technical analysis. You want to define a certain system that helps you to get the technical analysis the right way. Just like in technical analysis, we said we have chart patterns, we have indicators, we have historical price data, we have a lot of ways to define a strategy. But now how do you then, the first thing is define, the second thing is understand. Now you need to be able to understand the strategy which you have picked or which you have selected. Now let me give you a quick insight into how I started as a trader. I started with so many things. I started for a long period of time, even before I come into SMC. So I started with the general retail patterns. Then with trend line, I started with harmonics, the back pattern, a lot of patterns under harmonics. And I did wave, I did a lot of strategy. These are strategy on their own. They are a broader strategy on their own. The support and resistance model, the harmonics model, the wave pattern models, the ICT models now into SMC model. But now, having gone through all of these technical ways of analyzing price actions, you need to be able to come down or narrow down to a particular strategy. Now you have a goal in mind. Okay, let's say for instance, you are a Nigerian, you want to get to US, right? You know that you can't fly to US without your visa, right? You need the first step. With the first intention in your mind is I need to get to the US. That is the first thing. Now you define what you want. Okay, I'm going to the US to learn. I'm going to the US to do this. But you are not going to speak into that reality without taking actions. So what's your next action? You start to plan your visa and the likes. So now, having a goal about trading, you already have a definite things to do about trading. So the next thing now is understand what you already defined, right? And now, okay, I want to be a trader. I went on the YouTube and I saw support and resistance. Now that's a strategy I'm picking. Now I need to be able to understand the support and resistance. That is understanding what you've defined. Am I communicating? Am I communicating? So you need to understand what you have defined, right? It is until you understand what you have defined, now you have a goal in mind. Now, best thing to do is now understand the goal. So how do you understand what you have defined? It's by continuous learning. You can learn on YouTube, learn on PDF, and so many things. And while you're learning, you are going to enter in the state of confusion, which is, okay, I understand technical analysis in this, in this definite narration. Okay, let me for instance say I ask you to define a man from a woman. What is a man and what is a woman? The way you define them, a man is someone that has an XY or XX chromosomes and XY chromosome differences between them, which is the chromosomes. Now, in trading, there are so many strategies and there are definite differences between them, right? So this meaning, when you understand them to a depth, gives you an understanding of what you want to trade. Okay, I want to trade SMC. So I'm narrowing down my experience into SMC. So after understanding, you will still have confusion, right? You are not just going to 100% understand what you have. That's why we said define the first step. The second step is to understand what your strategy is. The next step is to what? To filter. Remember, I said you're going to learn. While you're learning, you are going to come across so many things that is circulated in that strategy, which is what? Which is now going to lead to confusion, right? Which is now going to cause technical analysis paralysis, right? Or short-term analysis paralysis. When you understand what technical is and how of an advantage knowing technical analysis can do to you, but because technical itself is a broad name, it's a very big name for so many concepts. Now, you then need to be able to filter out what you have understand and make sure, you don't want to have so many things going through your mind when you're looking at the chart. You want to have a definite approach or definite strategy towards the way you see the price action. So the next thing you're going to do is filter out this information. How does it work? You're going to collect data of the strategy through learning. This is what, you can see I split it into just two, while we have various steps into understanding technical analysis. You can see you have to collect data of the strategy through learning. After understanding, you collect data of these strategies, different strategies, be it SMC, be it ICT, be it anything name given to this concept. Just bring them together, then look at historical data from what you've learned. Then you come into the third phase, which is what? Filter. Everybody says filter, right? Filter on the chat box. Filter. Filter. What does it mean to filter something? It means after you've gone through the phase of knowing technical analysis to a lot of concepts, now you want to narrow down this to just something that you think it works. Now, this does not come from guesswork. right? It doesn't come from guesswork. It comes from what? Data collection, right? It comes from data collection. So I'm going to put that here. It comes from what? Data collection. It comes from data collection. So how do you collect data, right? Everything you've watched on YouTube, you've watched ICT, you've watched SMC, you've watched this, you've collected data. Either you jot them down, either you have them in your mind after anything. This is data collection. So you've collected data, you then filter out, no, I don't want to do this because of this. I don't want to trade SMC because of this. I don't want to trade resistance and so because of this. I don't have to do this. This is a phase you will know during filter phase. And remember, all of these things are time-based, right? They are all what? These are what? Time-based. They are not going to happen overnight. They are going to happen, gradually, process step by steps. You can see now, and I'm not trying to tell you this is the definite example into technical analysis. I'm opening your mind to see a large approach into technical analysis, which means we could have so many approaches into technical. Now we are talking as a trader that knows what they want. What do you want? How to trade? How do you want to trade? A definite mode of trading. Now you have to filter. Then you come down to, okay, I think I have two strategies in mind now. I think I have ICT and SMC. Can I work with both? Now, let's say out of the numerous strategy you watch on YouTube, you've come into a conclusion that, okay, I want to learn ICT and SMC. Remember, these two are also a technical analysis strategy. Am I communicating? These two are also what? A technical analysis strategy. Remember what I said in the start? I said, technical analysis is an umbrella to all of this strategy. So strategy is more like a definite system that you now decide to use in getting into the market. What was the definition of technical analysis? We say the role of technical analysis in the Forex market. Look at this here, right? We said what? It is what? It is to help traders make informed decisions. So having come into conclusion that, okay, now I understand what technical is in terms of my strategy, I can then make informed decisions with these two concepts, SMC, ICT. Then what do? That is when conventions come in, right? Convention. What is convention in the Forex market? Convention is that final hope you have, like, oh yes, I think I know what I'm doing. I think I understand this concept to an aspect. Okay, now I can start to make my way around this concept. You can see the stages at which we talk about these things. Technical analysis, yes, it's an umbrella to all of this strategy. Yes, I'm going to define my trading goals. Yes, I'm going to have a definite strategy. Now that I have a strategy, I have to understand how does it work, right? When you understand through continuous learning, you're able to filter out information from this, what you've learned over time. What I learned in the last 6, 7 years, I don't use everything. I don't use everything. I don't really use everything. You just need a little data from everything you've learned to eventually filter out the right information. How do you know the right information? When you are convinced. When you see a system that works over time. Remember in your last session, which was yesterday, the host was talking about risk management, was talking about how to approach the market. It was talking about you not losing your money, blowing your account due to risk management. All of these are also technical approaches. They are also technical approach, which means you already have that information firsthand from the speaker, which tells you that you need to have risk management in check, you need to have money management in check, you need to have this in check. They are also a form of technical analysis to protect not the system, but your capital. All of the risk management, the blah, 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 they are not to protect the system at which you are using. They are to protect the capital. Why your system is to protect you and the capital. Your system, your strategy, which you now start to get convinced about, is not just to protect your capital, but to protect you as a trader. And what? To protect your capital. So those are the two things what technical analysis does to you. So how does technical analysis protect a trader? When you have conviction in the strategy you use, there is that self-fulfillment. There is that, yes, I can solve problems. The difference between a worker and a business owner is that one solve a problem that eventually, helps them long term. When a CEO in a company when they hires an employee of labor, and the CEO said, I want you to be taking the salary at the end of the month. They get paid, yes. But who get paid in the long run eventually? The CEO, right? Because now the CEO have an in-depth understanding of the business long term. He owns the business, he can operate the business like they want. But then the worker can definitely, go outside and be sacked. And that differentiates a technical analysis trader who understand who is convinced about their hedge and someone who trades. You are both a trader, but they take signals, right? They take signals. Let's say Jay is offering signal services and you pay Jay for his services. Yes, Jay is going to give you, signal services. You are also a trader, but you rely on signals. You are not convinced of the strategy That is why you rely on signals. But when you are convinced itself, knowing about the technical analysis itself based on your strategy also protects you as a trader. So when you come on the social space and you see people doing something, because you are convinced of your system, you say, no, I'm not going to join this. This doesn't make sense. Let's say someone say code is going to buy. And from your system, you are convinced that code is going to sell. You already have that conviction you're not going to buy. You work on your system. So it protects you from the noise that would be outside of the trading system. Am I communicating? Am I communicating? So the next phase, which is going to be your final state, is going to be able to replicate. Technical analysis does not stop in knowing. Technical analysis stops in being able to replicate. J is continuously learning. I am continuously learning. But most of the time, what we learn right now, we don't apply it immediately as a trader. As an elite trader for me personally, I do not apply what I learned just now. I don't apply them immediately. Why? Because I already have a system that I replicate over time and over time and over time. If I'm going to add anything to my system, what I'm adding now is not what I just learned. It was as a result of what I've gone through another phase of defining, understanding, filter, convince, and replicate. Am I communicating? Let's say I come out with another, another, system of trading now. I'm not going to bring it out to the public and say, yes, this system works until they go through this phases of what? Of technical steps. Am I communicating? Now let's try to be interactive here. Can one person just indicate that they could, try to prove me what I just explained in less than 1 minute? Can one person do that? Let me see if you guys actually flow with what I'm saying. Can one person do that before we move into, other things? Can one person do that? And I have about 5 minutes to end up this session.
All
To end
right.
up
So
this
quickly,
okay.
Am I permitted to speak?
Yeah, sure.
All right. So briefly, what we've been listening to is the role of technical analysis. The role of technical analysis in forex trading. First of all, we made mention. The first thing we highlighted was to define our strategy. What particular strategy you'll be using to approach the market. Number two is to understand how the goods and bad and how that particular strategy in question works. Is it ICT, SMC? And number three is to filter. There are different parts of ICT stroke SMC. So which one works best for you? And I think that one it determines what particular session or what particular pattern what works for you. Then number four, you have to become convinced. You have to backtest and see if those things you have been learning so far work at that particular period where you want to be looking at the market. And number five, you have to replicate. That is doing it over and over again to see if it actually works.
Okay. Yeah. Does everybody agree with that? Does everyone agree with that? You can see the chart from there. Does everyone agree with that? Does everyone agree with that?
I'm trying not to be too involved in the question, so others can have an opportunity to say something. That's why I'm a little bit quiet.
Okay, no problem, sir. So yeah, does anyone agree with that? Yes, in the chat box, or no. Let's try to be to get engaged. So now after we've explained, the aspect of technical analysis, knowing that technical analysis is just the, an umbrella of the strategy we are going to learn. Now, ways to properly use technical analysis. If someone comes up to you and say, "Oh, Lois, oh, John, oh, this and that, how do you properly use technical analysis?" What's that question? How does that question make sense to you as a trader? Ways to properly use technical analysis. What are the ways we can properly use technical analysis? It comes from what we've said before. Remember that I talk of roles of technical analysis in Forex trading, blah, blah, but now we're talking about ways to properly use technical analysis. You can be doing something over time in the wrong way. If there's a way, that means there's always going to be a right way and the wrong way. If a channel to something, that means you can either be in the wrong channel or you can be in the right channel. But there are ways to properly use technical analysis. The way you can use technical analysis properly boils down to what? Boils down to the strategy. Boils down to the strategy. Say, the only way I would know you are doing something wrong if you do something that's related to my field of work. As an engineer, I studied engineering in school, right? Even though there is engineering field, but do you understand that people would say, "But you study engineering, why can't you fix my car? But you study engineer, why can't you build the house? But you study engineer, why can't you do this? Why can't you do that?" But engineering is just a field. In the field of engineering, there are different types of engineering. There's mechanical, there's electrical, there's civil, there's petrochemical, there's a lot of engineering field. So just because I'm in engineering field doesn't mean I understand to fix cars. Doesn't mean I understand to build that. I will have an idea, but not full understanding. So if I'm asking you what are the ways you use a technical analysis properly, you are going to explain to me in the strategy that you understand. Let's say you want to explain to me how you tell me, "Oh, when you want to draw a trend line, let's say this is your market going up. You tell me use the body of the candle and draw your trend line." Some people will tell me use the wick of the candle. So understanding that strategy and how you explain it to me boils down to the strategy. So if you are going to properly explain technical analysis to me, it all boils down to the strategy you are trading. That is why when you want to learn, you learn and narrow it down to the strategy you want. So when you're now coming to me and say, "Brilliant, I'm learning SMC, what is the best way to analyze this market properly?" Then I'm going to give an explanation based on what? Based on SMC. Does that make sense? When you need J on harmonics, when you need J on wave channel, wave pattern, it's going to tell you now this is the best way to analyze wave theory. This is the best way to analyze Y-curve. This is the best way to analyze harmonics. So what are the possible best way to use technical analysis? This boils down to what? To strategy. Am I communicating? Am I communicating?
Yeah.
So I want to type something out. So number one thing, it boils down to the strategy. You have to adapt your strategy and the likes. And you can't do all of this when you've already missed out on the foundation of the strategy you want to learn. Let's say you want to learn SMC, just like I trade SMC. Let's say you want to learn SMC. Let's say using SMC as a case study. So we have to use a case study. So when you use SMC as a case study, yes, I explain SMC because I trade SMC. You have to search the internet. What is SMC strategy? When you search the internet, you're going to come across so many, information about SMC. So when you come about so many information about SMC, look at someone with a proven track record, someone that does exactly what that you think knows what they are doing. Look at their system. Look at how they do it. So if you are doing something, if you want to pick a mentor and say, "Okay, I'm using this mentor to learn this strategy," just like when I learn, I'm going to use my field of study. When I learn engineering, I didn't just read engineering on the books. I went to school. I got certified. I got certified because I go through a path that is known and verified, which is called institution. A verified path that is known is called what? An institution. So this institution tells me when I'm taking each courses and I'm passing or failing them, they tell me when I fail them, they tell me you are doing it wrong. When I pass it, they tell me I'm doing it right. So the best possible way to know how to use a technical analysis properly is to go through that institution. So you are the one who then picks out what institution do I want to pick. Just like I picked out the university I want to learn from, I want to get satisfied from. The same thing boils down to trading and understand the technical analysis to the fullest. You might not pay, yes, we understand that. But when you're picking something, you have to pick something that you know definitely that this is a genuine handwork. When I wanted to learn, fundamentals, and when I learned it, I learned from someone with a genuine track record of that, of that learning process. Am I communicating? So if you want to learn SMC, if you want to pick two channels, let's say you're using YouTube as a means of learning, you can pick, two channels from YouTube. You can pick two channels on Telegram. These are people you understand, they know what they are doing. Go through what they do. Look at how they define what they use. Using SMC, we talk about order block, fair value gap, lines and lines and lines. But again and then again, we have streamlined this concept into simple terms. We've simplified them. Let me use the word simplified. We have simplified SMC into break of structure, stop on, and return back to that block. As simple as that. The rest boils down to how do I identify break of structure, how do I identify stop on, how do I identify return back to that block. So these are the things you want to learn over time. Now, let's say, for instance, I want to, from spam money concept, I said we talked about, order block, right? We talked about fair value gap, right? We talked about what? Supply and demand. We talked about, what else we talk about? Order block, fair value gap, supply and demand. What again? Help me in the chat box. Help me in the chat box. Order block, fair value gap, supply and demand, change of character, we have chalk, and the likes. See, one of the best things I always advise my mentee is that do the simple things first. Am I communicating? When it comes to technical analysis, do the simple things first. When you're going through the faces of traders who complicate trading, who makes trading sounds too, one massive things to do, you will start having problem. Because why we have problem, let's go back to the first one. I said replicate. You would not be able to replicate things that are complex. How many things do you see engineering do? A complex, build up that engineering does that it does it over and over again. When there is, you talked about, ocean exploration. How many times do you see science going into the ocean? How many times do you see science going into the space? They go, but it's not all the time because they are complex things. So that comes back to trading. You don't want to take it too complex. Whatever it is you want to learn about SMC, make sure it is as simple as it should be. Why is that? So that you can replicate. Am I communicating? And that is why we keep talking about learn from the proper source. Use the proper tools to learn. Filter out information that you digest. If you're learning, learn from, a proven institution. If I want to learn, be an engineer, I could easily start looking at YouTube on my phone and say, how do you fix it? How do you fix it? But I'm not going to be satisfied. I'm not going to be satisfied. I'm not going to get that conviction that, yes, this system, this learning, I have to get something at the end of the day. But because now I have learned with my experience, the type of trading, the type of what I put out there, the content I put out there, SMC, over time. I do this thing over time, every day, every week, every month, and I do the same thing. So these are the things you look out for in order to get a high-end strategy. What I meant by high-end, a strategy that has been tested and result has been given. And the only way you can do this is when you learn using the right source. I keep saying the same thing, learn with the right source, because there are so many information. If you don't think, okay, yes, SMC is too complex for me to learn, you can learn other things. You can learn Wyckoff, you can learn LL12, you can learn Harmonics. But the main point of contention is that everything you learn will lead to one singular action, entry. Am I communicating? Whatever strategy you have learned or you might have learned will lead to one singular decision to make, either you buy or sell. So that is going to be the final decisions you are going to make. That is going to be the final outcome you are going to make. And again, a good strategy is not determined by the short-term win. It is determined by the long-term win. Because we are here for the long term, right? Every one of us here, I think most of us here are here for the long term. So a solid strategy isn't known by the short wins, but by the long-term win. Remember, when we start again, we are still going to come back to understanding your strategy. After understanding your strategy, you get convinced. The conviction you have in that strategy is because of back-tested data, right? You've back-tested data. Okay, I use SMC out of 5 trades. Let's say I have 5 trades, right? And out of 5 trades, I won 3 and I lose 2, right? If I won 3 at 2R, minimum 2R, if you have 5 trades and you won 3, you lost 2, right? How many percent is that? You have 5 trades, you lost 3, you won 3, you won 2. How many percent is that? What's that win rate? What is that win rate? What is that win rate, chat? Out of 5 trades, you won 3, you lost 2.
That is like saying you are above an average.
You are above 50%, which is 60.
Yes, an average 50%.
So let's say for every win, you have the 2.5 target or 3-hour target right there. And if you have 3-hour target, winning 3 will give you what? 9-hour. Right, above 60%. You have 9-hour, that's 3. And if you lost with your strategy that has been, you are totally convinced you are going to have what? 2%. Right? So minus 2%, which is eventually going to be what? 7% overall. So at 60% win rate with a 3-hour target, you are still going to come out 7% higher if you are risking 1% per trade. Okay, 3% is too much. We are gambling too much because we said 3%, 3 out of 5. Now let's say 2 out of 5. So let's say you want 2 trades and you lost 3 trades, right? At 3 hours, at 1% per trade, you want 2 and your target is 3 hours, right? 2 times 3, that is 6 hours. You lost 3, right? That is what? Minus 3 hours. Overall, what do you have? What do you have? You have 3%. This is in a situation where you lost more than you win. So if you have this, what is your win rate? If you have 2 wins and 3 losses out of 5 trades, what is your win rate? %40. At 40% win rate, you can still be profitable with a convinced strategy. So when we talk about win rates, now in terms of our strategy, which is more important, our win rate or our risk reward? Which is more important? Our win rate or our risk reward? Which is more important?
I think the win rate is more important than risk to reward.
Your win rate is more important based on the strategy we've just explained now. Now, let's say our win rate is more important. Now, let's put this win rate at I want to increase the win rate and give you a kind of let's put the win rate at 80%. And we are looking at 1-to-1. Do you think long term, do you think this is going to be always profitable? Based on your strategy, okay, 80%, 1-to-1, always profitable. Yes? Fine. You can see that at this point, we are reducing our win rate. Now let's put our win rate into 50%. Right? Which is an average win rate. So, and we still have 1-to-1. Are you going to be profitable? Remember that when we're talking about, RR, we reduce our RR drastically at this point. But at this point now, we are bringing our RR, our win rate to 50% at 1-to-1. We used to be profitable. You'll be break-even. So one thing you don't want to do with your strategy when it comes to trading, you don't want to, because the market is not something you predict over time. You can have 80% now, and at the end of the day, you drop down and have losing streaks. And when you have losing streak, you lose your capital. Right? So most of the things I always explain to my mentees is that do not chase higher win rate. With your strategy, make sure you're looking at averaging 50% win rate and a better risk to reward. Let's say you're looking at 3% for trade, even as an intraday position, 3-hour trade, and you're making 50% win rate. You are still going to be more profitable than he who has 80% win rate and is getting 1-to-1. In the long term, yes, short-term goals, this is fine. Long-term goals, this is what? This is better. Short-term, yes, 80% fine. But what happens when you go into losing streaks? What happens? You collapse. At this point, you collapse. At this point, you still maintain your strategy. You still what? Maintain your strategy. We saying 80% win rate. It's more like over-exaggerated approach. Am I communicating? In trading, when you tell me you have an 80% win rate, you've exaggerated the potentials you have. Even over-exaggerated. So if you tell me 60, if you tell me 70, yes, I can believe that. You tell me 50, 60, yes. As an investor, I will ask you, okay, you're telling me 60%. Okay, what is your average reward in a month? What's the average reward in a year? I'll be okay with it. I'm not going to let you tell me as an investor, I'm going to make you 50 cents in 1 month. I'm going to make you 60% in 1 month. No. What is the risk to reward you will offer me on the money I'm giving to you? How many percent growth? I'm interested in that conversation. A lot of times when you're telling people about a strategy and you're telling them, yes, I can do this better, I have a proper way of analyzing the market, I can attack the market with the right mentality, then they ask you, how do you trade? I say, I'm looking at 1-to-1, I'm putting in my money into 1-to-1. At what point you want to over-risk on that 1-to-1? Because 1-to-1 is a very low risk to reward ratio. You're risking 1,000, you're making 1,000. If you lose 1,000 now, you lose the next 1,000 the next time. So it might compound short term, but long term, it is not. It's not a visible approach. Am I communicating? So the best way, let's go back into the foundation. The best way to analyze technical analysis is to be totally convinced in the strategy used. And what is the best way to be convinced? When you already have a proven system, by filtering out information, now you're convinced, you're able to replicate. And how do you replicate the system? In the case of market, where you can't get opportunities all the time, you want the better risk to reward. 1-to-3 at minimum. I tell them 1-to-3, the win rate is less important. It could be at 40%. You see, we use 40% here. At 40% win rate, which is this one, it is the worst that could happen to you at 40%, right? When you're at 40%, it means you're at negative win rate. But your risk reward compensates for that. So a better system for you is the one with lesser win rates for more risk. Yes, you will take losses. Yes, it's fine. And we are making a case for what? And a negative win rate, because at minus 40% win rate, that's not a good thing. But if you come to, let's say, 50% at break-even win rate, 50%, and you're looking at 1-to-3, you'll be more profitable. That is what? A better system. Am I communicating? So you want to look at your win rate, let's say 50%, your risk reward at what? 1 to 3 minimum. If you look at my system at 3 hours, sorry, 3 hours minimum, I mean 3 hours. If you look at my system, if you have been following me for my channel, 2 years ago, I could get 1 to 10 a week and go to bed and call it a week. I could get 1 to 10. I've had my best win rate at 1 to 60, 1 to 80, 1 to 100. When that was what I think that was 3 years ago. That was my best trade in trading so far. I used to have a very lower stop loss and higher risk reward, but it wasn't. The honest about that, it wasn't consistent to do that. But I wanted a consistent system, and over time I reduced to 1 to 5. Over time I reduced to 1 to 4. Over time I reduced to 1 to 3. I realized that 1 to 3 was more consistent for me. So if you look at my channel now, you will see more of 1 to 3, 1 to 4, 1 to 3, 1 to 4 than a higher risk reward. It's a consistent system. You don't just want a winning system, you want a consistent system that guarantees what? Profitability. And all boils down to what? Your approach with what? The technical analysis and your goals. Without this right information, you keep running around the circle, you blow multiple accounts, you get a mental meltdown of the strategy you use. Am I communicating? Am I communicating?
Yeah, most definitely.
So, do you want to get educated with the right? The first thing, you want to get the proper education for you to be able to use the right technical analysis. Because there's a saying that what you don't know, your mind cannot conceive. Is that the right thing? What you don't know, your mind can only conceive what you've known or what you've had. If you don't know something, you can't even think about it. The way we speak, our accent, is based on when we are infant, when we just when we are just conceived, what we hear, that is how we speak. Whatever it is you know about trading, it is what you have been exposed to. So for you to have the right proper analysis in technical trading, you have to be exposed to that system. So how do you get exposed? You're learning from those people who already know it. The truth about it is you're not going to sleep and wake up with one new idea about trading that has not existed before. You are not. There's possibility that you're not just going to wake up tomorrow and start new ideas about trading. Trading has been there for so long. So someone here should please try to brief us on what you've explained so far. So I wish 1 hour. So can someone here just try to explain and brief what we've just explained so far?
All right. I think for the sake of time and for the sake of everyone following up, what if I go ahead with that instead?
Sure.
Okay. First of all, basically, I'm not going to be giving exactly what he has said because I believe it won't be any good since the record will be available and everybody would catch up with everything. But I'm going to give you guys a summary of what he has said, so I'm not going to be quoting him word for word from what I have understood so far. And if you can see also on the chat box and also on the Telegram channel, I have been dropping updates from the class to show you that I'm also following up. I'm the host of the event, but as you can see, I'm also benefiting from the event and I'm also making a lot of insights available for you guys from what he's trying to explain to us. So first of all, let's say in the aspect of the role of technical analysis, what he has explained to us is to basically give us insights to the structures of what technical analysis is supposed to be for. As we can see in the pyramid structure of what he presented, he's trying to show us that even at a technical level, that is in a pyramid-like structure, the role of technical analysis is not to tell you you're supposed to buy here or to help you detect where the market is going to go next. We can clearly see that it's basically to help us make a more refined, a more informed, and a more structured decision to whatever action we're going to be taking in the market. And then also, when we look at page 2 of the presentation of what he presented to us, we see technical analysis in more of a symbolic representation, not in the pyramid structure anymore, but in a form of diagram familiar with in the Forex space. So with analysis, they want to see line, they want to see structures. So from what he explained to us, we understand that basically every method within technical analysis is a method, is like a type. So it's like a method, your approach you use markets. Simplicity is always the recommendation. So we are expected to keep it simple, you know. So from the presentation of what he has explained to us, we understand that technical analysis basically the fundamental structures to when we talk about our risk management, against our trading plan, and against the determination of our consistency, or what determines how consistent we're going to be in our profits, where we're making the in between winning rates over your risk management. So if we look at that basic presentation, or let's say example, is to try and show you that the role of technical analysis is to also help you improve your win rates, and at the same time help you manage your risk management, regardless of risk management being a psychological thing. It is meant to also be technical as well. You're supposed to be calculative about it, and you're supposed to make sure that the structures are in place to make sense. Because as long as your approach, even in terms of risk management, is properly in check, it can help you determine your win rate for the long run, not just at an 80% stop in a month, and then next month you lose everything all in a single trade because of poor risk management. So technical analysis does not take the aspect of risk management away. You're not supposed to quit technical analysis. You're not supposed to just take a trade based on the lines you saw on your chart. You're supposed to make sure that they are also in line with your risk management plan to also better improve your win rate. So as we all know, technical analysis is an aspect that can also help to reward ratio, which is something everybody's familiar with, your RR, which is a technical tool as well. We are to also understand that regardless, risk management is what brings the consistency to the game. So basically, from everything Mr. Prote have presented to us today, we can clearly see that technical analysis is an aspect of trading that requires a lot of calculation, a lot of attention, decision making, and simplicity at its core, because of we have so many methods and so many content of trading. And this is basically a brief summary of what he has been presenting to us for the past 1 hour, which I have basically gained a lot of insight and refreshed my memory in all this. I don't know if you have anything to say before I add anything to that, Mr. Prote.
You can proceed.
Okay. From my own aspect, as we all know, I am an individual who uses multiple technical methods, right? And today is the day we're talking about technical analysis. We're talking about technical method. So I chose this day particularly to be handled by ProTrade for the main reason that he uses a single method. And this is something I've seen him use for a very long time. So I thought about it and I said, okay, there is a complaint that I would to the public should be a system where they have an individual who has a lot of insights, who uses a single method. So that way you can have insights from both angles, to maybe why you should use a single method, as he has explained to you, or why you should maybe want to learn other methods, not because you don't feel like your edge doesn't work anymore, but because you have gained insight from somebody as well who uses multiple methods. So that aspect is what I want to explain to you now. Now let's talk about the aspect of using multiple methods. What role does multiple method play in technical analysis? Why are there multiple methods in the first place? And should you learn multiple methods? Now, these 3 main questions I've asked, I don't know if, so I will be able to maybe place a breakdown presentation in words later in the chat group. Can you guys also write the question down? So maybe after the class, I would use what we have on the chat box to create a chat presentation for that. So first of all, we said, why are there multiple methods in technical analysis? Second question we have, should you learn multiple methods? And let's say the third question we have, I don't know. I think I'm missing one. I think should you learn the multiple method was the third one. The first one was why are the technical? Okay, let's say types of technical method. Let's use that as the second one. So I'm sending it now to the group chat so everybody can have an insight to what I'm about to explain. It's very brief, but I believe this is the best day for us to deal about this particular topic as well. Are you guys following up? Am I audible?
Yeah, you're audible.
Okay. Now, from today's class, I believe everyone knows that Mr. Putit has not yet given you insights to any technical method in particular. He gave some example about liquidity, which we clearly understand why, since he's an SMC trader, and I believe everybody here trades SMC. I myself, I also trade SMC. So when we say SMC, what is SMC all about in terms of types of technical methods? So when you say you want to choose SMC, are you sure you understand what SMC is trying to explain to you? Because in terms of technical analysis, the whole reason of being technical is being logical. That is why when we talked about technical analysis, we talked about collecting data, presenting data, and simply just trying to be strategic. So it's a statistical method. It's a statistical approach. So you understand that you're supposed to be logical in the first place. So when we say smart money concepts, we say concepts based on the smart money, which we say smart money goes into the banks, the institutions, these guys who trade big funds. We are trying to predict their blueprints. So technical analysis is supposed to be a calculative approach, which also we know smart money in each concept has its own technical and logical reasons behind it. Like the examples he said we should give: fair value gap, order block, breaker block. Those are all single concepts within smart money concept. Individual concepts, they all have a reason behind them. Yes, another block could look very simple, but it's the symbolic representation of the concept. SMC, smart money concept, is a symbolic approach to technical analysis. Smart money concept is a symbolic approach to technical analysis. Let me write that down. Smart money concepts are symbolic approach to technical analysis. This doesn't mean they are not logical. Don't get me wrong. This doesn't mean they are not logical. This doesn't mean they don't work. When you say something is symbolic, it has a meaning, but it also has a representation, a diagram. So when you say, okay, if smart money concepts are, when we say smart money concepts are symbolic representation, then what are Wyckoff? What are Elliott waves? What are harmonic patterns? Is Elliott wave not a symbolic representation? Is Wyckoff not a symbolic representation? What does it mean? Okay, Wyckoff are not strict symbolic representations. Wyckoff are schematics. If you look into the word of what a schematic means, it's not just a diagram. This diagram comes with concepts and structures you have to meet to make sense. So a Wyckoffan, or let's say a person who trades Wyckoff, doesn't necessarily need to know the symbolic meaning of what a reaccumulation is talking about. But at the same time, in terms of diagram, he doesn't need to know what a reaccumulation should look like. But when he understands the structure of the schematic, he can basically tell you this is the reaccumulation when he looks at the market without drawing those lines, because there's a structure in his mind. So you see, technical analysis is all about structure. collecting information. So Wyckoff traders collect information from the schematics they see. Elo12 is a strategy represented in alphabets and numbers on a basic level. Let me write that down. Wyckoff, I said, is a symbolic. I'm giving you guys types of technical method, breakdown of on a basic level. Smart money concept as symbolic approach to technical analysis. Elo12 are technical analysis in alphabets I don't know if anybody. Okay, I'm trying to write that down now. Elo12.
Don't worry, you can continue. I'm putting them down on the screen.
Okay. So let's say Elo12. I think I'll make that available on Telegram community, or maybe somebody can put that down. Elo12 are technical representations in alphabets and numbers. Now, these alphabet and numbers, now anybody looking at it would see a line and you see ABC. That is what an average person would say. Okay, what is this ABC saying? It can't tell you anything if you don't know the law. You can't understand the Constitution of Nigeria if you don't know the Constitution. You can't just guess it because you're an adult. That doesn't work that way. You can't just guess Elo12 by just looking at the chart constantly and think one day you finally get it. The numbers and alphabets have laws they are following. If you don't know those rules, you can't use them. Same way the other block, which is represented with a single, a plain highlight written with minus OB. It's a symbolic representation of a concept that is being highlighted. If you don't know the meaning of that concept, that means you don't know what another block is. You just know the symbolic representation of another block. That's why I say other block are all about symbolic representation, smart money concept. But Elo12 itself is a numeric and an alphabetic technical method, which means you can't just tell what it is by looking at the symbol, except you know the rules to the symbol. So if you know that ABC are basic patterns to represent corrective waves, when you see somebody using ABC, you're expecting them to be putting that on a corrective structure, probably a retracement. So it's supposed to be what? Based on rules. Now, what am I trying to say? What's the point of all this? I just gave you guys types of technical methods. So why are there multiple technical methods? Why do they have different approach to technical analysis if we're just trying to predict a single direction? Now, on that aspect, you need to understand that as the day goes by, remember, simplicity is your edge. An edge would just be the simplest approach you use to interpret the market for yourself. Do you understand? From your own experience, you can't have an edge if you don't have an experience. You can't have an edge by studying somebody's work. You would only have a method which, by the time you apply it, you're going to redefine it, which will now make it your edge. But you can't call another person's edge your edge. That's not how it works. You can't see what I'm seeing unless you are in my shoes. And if in my shoes it had to come from my leg because I felt it, means you have to put it on too and feel it to understand my edge. And at the same time, probably you might not get pain because we all have different equal, size of leg. So the legs are not equal. So you should understand that another person's edge might not be your edge. Those who follow Wyckoff is probably because they understand Wyckoff better. Maybe they were groomed with rules and structures, so they prefer to use such schematics. You who is coming from an average system, have you been a symbolic individual? Have you been more of interpretations? Have you been a rule-based individual? You don't have to use smart money concept because you see it is more easier to understand. You should understand that smart money concept is the most complex among all based on its meaning, because every symbol on the chart has a meaning. So but you don't know because you don't have the experience yet. You don't have an edge yet. You can study and study and study, but you would only know when you have the experience. And by the time you have the experience, you can't drop the method anymore because you already learned it. Now you just have to keep using it till you refine your own edge. That's how complex smart money concept is. But you don't have to find an edge in Wyckoff. You just have to know the laws. If it is not fit, it's not fit. You can't force it in. Like you can't force the market to become Wyckoff. Wyckoff basically interprets the trend. So these different methods were invented by different people who did research to the market structure, which Mr. ProTrade mentioned to you about market cycle. There's a cycle which the market moves. This cycle is known as the phases of the market: the accumulation phase, the distribution phase, the markdown phase, which is the redistribution, or the markup phase, which is the reaccumulation. Every system is built based on this market cycle. Market cycle, you can search it up. Market cycle. Market cycle basically is the structure of which market structure uses to understand the trend of the current situation of the market. So the trend is based on market structure when you're using technical analysis. But the trend itself is a different thing, because now the trend is told by technical analysis to be in two different phases, either an accumulation or a distribution, or it's in the opposite phases of those two, which is either is reaccumulating or is redistributing. So the trend is defined by technical analysis. That is when you're using technical analysis. But when you're coming from a fundamental level, the trend becomes that's when you see fundamentalist on the early when he talked about using the stock system. You never heard him mention any system related to technical analysis. That is a fundamental approach. The trend is still valid when it comes to fundamental approach. You heard him multiple times say he follows the trend, but that doesn't mean in terms of technical analysis, you have to follow the trend the way it is. Because there's a news coming up in the US doesn't mean you should go and buy Euro USD. It doesn't work that way. And at the same time, Euro USD can be booming and there is no news in front of you. The technical approach plays its own role in the whole system. But at the same time, your edge comes from your experience. So in all this now, let me just summarize it with saying on the last aspect, should you learn multiple methods? Before I continue, anyone has any question from what I've said so far? Before I go into should you learn multiple methods, I just spoke to you guys about different types of multiple technical methods, sorry. Why are they different technical methods? Simply because multiple people went through different approach to the market, where they came up with different methods. Types of technical method. I told you guys about Wyckoff, Elliott wave, harmonic patterns. And as you can see, they all have different rules to their approach, which is why they have different approach. Okay. So now, should you use multiple methods? But before we go into that, from what I said earlier, am I communicating? Are you understanding me and am I making any sense?
Yeah. I'm sorry, I want to ask a question.
Okay, go on. I think my mic is audible.
Jay, can you hear me?
Yes, we can hear you.
Yes, I think I can hear you.
All right. I just want to ask that no, I think I saw it somewhere.
I don't know if it's my network, but I think it's cracking. Or is it my network, please? Am I the one cracking? So I know my
No. It's from me.
With some let me say a specific time on that, like looking at some of these methods that you've listed out. Is there any way time frame has to do? Is it
okay? I think he's trying to say something about time frames.
Hello, can you hear me now?
Okay, yes, I can hear you now. What did you say?
Yeah, can you hear me? Yeah, I said I read it in a place that some techniques, or let me say some methods, actually work with specific time frame. You understand? So I want you to clarify on that. Like, for example, some people will say that maybe certain method. So before you can see those patterns or before you can use it effectively, you have to be on a certain time frame. So I want you to really explain that, or it's just some fibers from some people who are confused somewhere, stuff like that.
Oh, okay. I think that's a very valid point. That's a very valid point. And that is before we go into the aspect of should you use multiple method, that would be in terms of types of technical method. Are they based on time frames? Right? That would be the question, right? Are the technical approach based on time frames? Are they defined by time frames? Was that your question? Okay. I have to be sure before I answer. All right, so first of all, what you need to understand is that there are certain patterns that might be based on time frames, but you need to understand that when you go into patterns, you are already going into a method, right? For you to know a pattern, it has to be coming from a particular method. So that pattern can't be a type of a technical method. It has to be a type of a technical method. So now, when you're using these patterns, the method you're coming from has to define which approach those patterns are to be used. For example, on Elliott wave, anybody who has used it will tell you it's a higher time frame based system. That is because it does not define any specific method for lower time frame entry. First, because the method itself originally came from stock trading. And stocks trading does not have to define its lower time frame the way we do, simply because their leverage and system are completely different, like what the brother explained to us 2 days ago. So you should understand that stocks market was not built for lower time frames. One. Now, when you look into patterns of Elliott wave, you expect them to flow with higher time frame, because the individual who discovered this method itself looked at a wide range of multiple time frames on the higher time frame. So let's leave that for that. But when you talk about smart money concepts, it's a method that tries to predict manipulation as well. Smart money concept it creates a room for manipulation, which brings up the idea of liquidity. Because the only reason they might be manipulating the market is to either generate liquidity or to clear out liquidity, which in one way or the other is probably to generate liquidity. So if there's liquidity to be generated, that means there's an aspect to be manipulated, because somebody is definitely generating the money and somebody is definitely manipulating somebody to generate the money. So in the aspect of smart money concept, it comes into reasoning and dissecting of different patterns, because you're trying to know what this person wants to do. Now, I'm just trying to give you insight into each method in a specific level. But now, are setting patterns based on time frames under smart money concepts? Most definitely. Why is that? Because the method itself is based on predicting the movement of an individual or an institution or a single action in the market, which might be a single candle clearing out liquidity or a candle breaking structure. These are smart money terms. So a structure can be broken on the lower time frame, but still valid on the higher time frame. That is on smart money concept. The only reason that is happening is because probably there's a definition for market structure. And if you don't know that definition, you might not be able to interpret what's going on in the lower time frame. So does that mean the lower time frame has a certain structure? Of course, we know what is called a change of character, which is the first break of structure before the official break of structure. And if there's a room for a change of character, that simply means it's coming from the lower time frame. So if you're looking to trade Euro USD, you can't be looking for a change of character on the 4-hour time frame and expecting the reaction to be within an hour. Of course, because it's a single candle takes 4 hours to form. The change of character you're observing took an entire week to form. How come you're expecting the market to react in a single day? So the strategy itself is based on multiple time frames. It was designed based on multiple time frames. Because if you go deep into smart money concepts, you will discover that there are certain people who still trade the seconds time frame, strictly the 1 minute time frame. And there are certain individuals who trade strictly the 1 hour time frame, the daily time frame. So everybody trading now discovers something new. Remember, we are all scientists in forex trading. We discover things, we learn from our experience. Everybody knows this. And then I learned a certain pattern that is very, 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 very resourceful on the lower time frame. Then I decide to document it. Do I owe you an explanation for what I'm documenting? That's smart money. That's being smart. That's smart money concept. I might owe you a definition, but I so definitely do not owe you an explanation for what I discovered, because you definitely will not understand what I'm trying to explain. You don't have the experience of what I discovered. But if I owe you an explanation, which you then use the explanation to try and discover the experience, then you will know if I'm, valid or not. Or you would need somebody with more experience to be able to break that down. So if technical analysis are based on multiple time frames, it's a matter of what type of method are you using. Technical methods are based on rules and concepts. All methods, if it's technical, it's based on a concept or a rule. So you have to understand that it's the type of method you're using. Smart money concept is a multi-dimensional concept. It's not even based on just a single time frame. It's based on top-down analysis, top down to the lowest, as long as you can go. Do you understand? So you have to be open-minded to expect everything and research into multiple patterns, but you still need to have your daily routine, your own approach to how you use these methods. What comes first? That is your edge. What do you look for first? How do you look for it first? We heard Mr. ProTrade said he follows the trend. When he looks at the market first using his technical method, he first goes into the trend. That is his edge. When I first come into the market, do you know what I do? I start with the higher time frame. I go into the market structure. Because once I know the market structure of the higher time frame, I will definitely define the trend. It's my own approach. I'm using smart money concept. ProTrade is also using smart money concept. We have a similar method, but a different edge. So your edge is defined by your experience. Your edge is your comfort, is what you're able to do when you're in your space, not what you learn, which takes us into, should you study multiple methods? Now, I don't know if I answered your question in the aspect of are patterns, are methods based on multiple time frames. Yes, depending on what you're studying on a basic level, that is the answer. Do you understand? So I should go into the last aspect so we can conclude for the night. Should you learn multiple methods? I don't know if your question was answered, Pico. Am I audible?
Yes, you're audible.
Okay, so let's assume it's not available. So let me go into the last topic of what we have to say today before Mr. Poted, if he has anything to say, which is, should you learn multiple methods? Now, this particular question goes into the psychological aspect of technical analysis. Psychological aspect of technical analysis. I'm just going to break it down very simple since it's a psychological thing. So I'm going to talk about the brain. So once I do that, you should get my own insights to how I'm able to understand multiple methods, or why I even use multiple methods for study in the first place. Not to trade, to study. Now, the brain itself, the brain in the head, we all know that the brain has the left side and the right side, right? And then if you look into research and the aspect of the brain, you would understand that there's an aspect of the brain called the voluntary aspect of the brain and the involuntary aspect of the brain. Simply what we call the conscious mind and the subconscious mind. And this is also still going into your attention in a conversation and what is going on around you. So as I'm speaking to you now, the only way you can gain an insight using your brain from what I'm saying is if you give me your attention, right? But you can 100% be listening to me, but not getting any insight because your attention is somewhere else. This is the brain war. This is the psychological game. This is it. When you do that, you should understand that there's also a different action the body takes when you're emotional, which is your body goes into your routine, your body goes into your pattern, your body goes into what you're familiar with. Am I communicating? Are you guys following up with what I'm trying to explain? Let me go on. So when you're trading, are you emotional or not? Can anybody answer me that? Maybe in the chat box or something. Are you emotional? Is emotions involved in trading? Maybe what I'm saying might be something you think is not related to trading. But everybody agree with me that trading is emotional. So if trading is emotional, you should understand that when you're in a pressured trade, you should understand that your brain would go into its actions of your routine when you're pressured. Now, as a trader, if you're not aware of these aspects, how do you handle it? If you don't think these aspects are important, how do you now handle it? Because you still have a human brain and it's going to work as a human brain. There's nothing you can do about it. You can't force the brain to be a machine. That's why they are inventing AI now to eliminate the aspect of emotions. Now, on that being said, now what do you think your brain does when you are in a pressured situation to make a decision with your edge and you don't know anything else? What do you think your brain does when the market is being psychological with you, trying to manipulate you, and you do not have any concept in your head that you care in your involuntary brain to be poured by your brain as a means of interpreting, give you a way to stay calm. This is the reason why I decided to never, because my edge was not working. You see why I say it's a technical psychological game. Technical analysis is all about. Anyways, I'm sure the recording will be something that would be very valuable as well. I know most of the times when I'm into explanations, when it comes to the psychological aspect of things, it is very, very complex. And I'm not expecting much from people because I knew what it took for me to also understand it. A lot of experience was involved. I don't expect you to understand everything in a day. So when the recording is out, please take your time to also dissect it as a means of research to be able to properly understand what we have been trying to teach you. You understand? Like he said, everybody have a means of accumulating information. So we're not expecting ourselves to go above our edge. We are human beings. So, but what we are going to say is when the information or when the tools are made available to you, please try to put a little bit of dedication so you can see positive results. Do not expect anything from a one-day action. I'm telling people this because human beings don't really look at it anymore. Do not expect anything different from a one-day action. Don't, because you attended a one day. That's why it had to be 7 days. So it's not even a one day. So that's why we are expecting to affect the involuntary aspect of your brain as an event you attended. Because I work with the brain. I don't work with the body, I work with the brain. So I'm very psychological. So what we're trying to say is that whatever you're learning, don't look at it like you're destroying your edge or you're trying to find a new method because your method has not give you what you're looking for. Stay disciplined to the method you know. But when you see a valuable information, dissect it. That is all. Dissect it to know how it works. Don't condemn it. Dissect it. When you hear somebody say, I think it's a bearish market, as a trader, and he's using Wyckoff, you're using smart money concept, you should be happy. You should, instead of you trying to say, I don't trade Wyckoff, so I understand why you're saying that, criticizing them, you should rather tell them, please, using your method, what can you see? So you can confluence it with what you already know with your edge. Don't look at methods like a religion. Don't take them like tools. If you look at the methods like tools, you would have no problem using them. You won't say because you are trained to use an axe no, you're trained to use a hoe. Then in a situation where you're supposed to use an axe, you say you want to use a hoe. How does that work? Because you know how to use the cutlass, and then this brother knows how to use the axe. Don't you think if you should collaborate and understand better how both sides work, it will do you more good than harm, trying to exclude yourself from the information on the axe? That is all I'm trying to say. So in the aspect of should you learn multiple methods, have the method on your voluntary brain. Have the method that you consider your edge. Have the system, not just the method. Have the system you use in the markets, you consider your edge. The system you consider your approach when you're about to analyze the market. Then have informations you would review when you are under pressure in your brain from a trade that is giving you stress. Because live trading is completely different from explanations and, all this we're trying to do here. It is very emotional. I believe nobody is emotional right now. When we become emotional, the human brain goes into the animal side. It goes into the involuntary aspect. It starts to look for things to pop up to keep the body pressure calm. So are you sure your animal side is in check? Are you sure your psychology is in check? Because you don't expect a man with 5 years experience in a single method who has stick to it with a psychological approach to now have conflicts under pressure like you who is coming into the market. He learned this thing 5 years ago. He learned it in a much better condition, not on Trump's tenure. Do you understand? Now you're in Trump's tenure and you're trying to do the same exact thing he did 5 years ago. It will not give you the same results. The market never repeats itself. The conditions are always changing. So the only reason I would say you should look into other aspects of things, learning never ends. It's not a saying that is only applicable to school. It's also applicable to trading. Learning never ends. The more you learn technically, the more you learn how things work, the more you know how this system, the algorithm works. That does not have anything to do with your edge. Do that for the sake of the algorithm. The more you learn how models work, how models are interpreted, the more you understand how the algorithm work. The more you know how to use social media, the more you know how the digital system of the banking works, the more you know how the brain works, because it is all the same thing. It is the same. It is just an algorithm. That is why the algorithm knows how to predict human behavior. You don't, because you don't view it from that perspective. That is it. You criticize and you condemn. You cancel because it is not part of what you want to know. Your brain is faster than. Did you know that the comparison of how the brain dissects information can be compared to the speed of light? You cannot calculate the space in your brain of how much you can download. What makes you think one edge can be destroyed if you have that as your edge because you learned a simple concept? An edge is something you have been doing for a long time. It's not a concept. There's no concept like an edge, like what we have been explaining since. The edge is your own experience. That takes time. So you cannot tell me you who learned trading today, you found your edge. That's a lie. You just found the concept. For you to have your edge, you must have experienced trading for a little period of time, minimum of 6 months. You must have battled your emotions to know what you are patient with. Because an edge trader knows the days he trades. He knows the market conditions is okay. He knows the kind of pair he trades. He knows the kind of... You can't do all those things by just picking them in a list and then sticking to them. You do them by falling in love with it. Your most favorite pairs becomes your pair. They don't happen because you choose them. They happen because you experienced them. You traded Euro USD for a little period of time and found out how easy it is to understand the price action. That's why Euro USD is your favorite pair. It's not if it's because your mentor uses Euro USD, then you're in trouble. Because your mentor uses it for a reason, which you don't. You're in trouble. So the aspect of technical analysis, in as much as it is in types and in methods and in concepts, we should understand that it is all about being strategic, being scientific, making research. Fundamental analysis can be considered as the artistic aspect of trading. The industry of forex trading can be considered as the artistic aspect of trading. It's arts. That is arts, not science. But the aspect of technical analysis is considered the scientific aspect of the market because it's all about discovery. Every market teaches you a different lesson. Every analysis holds an unpredictable playout, regardless of how much you define it. It is still unpredictable till it plays out. That is science. Till tomorrow comes, you can't tell what's going to happen. That is science. That's trading for you. That is why I say trading is a way of life. The aim of this bootcamp is to give you that understanding. So whenever you're in the market or whenever you're under pressure, you stay calm and not let your actions ruin your decision. Don't let your actions from the pressure, don't let your actions from the indiscipline, don't let your actions from the news take you out of your edge. And if you're still new and this is your first time or this is, a system you're coming into, please be ready to learn. Don't start with an ignorant mindset of saying, I'm sticking to this method. It is just a technical method. That does not define your edge. Your experience defines your edge. And there are traders who use support and resistance today who are profitable. It is not the technical method. It is the edge they have developed over the years using support and resistance. There are traders who are profitable using Elliott wave. It is not Elliott wave. It is what they have discovered using Elliott wave for a period of time. And I think this will be all for the night. I think we are about 2 hours, if I'm not mistaken, or an hour in. Anyone has any questions so far? Mr. Poted, if you have anything to say, that will be all from me, as I'll be concluding here for the night. Poted, do you have anything to say, bro?
Not much, because you've actually covered most of it. So I'm going to just answer the main question there, which is, should you learn multiple methods? I always like to be as practical as possible. Learning methods and applying multiple methods are different. When you learn multiple methods, it's not like you are applying all the methods on one trade, right? You can, and also have an idea. I'm a mentor, but what I do is I teach out the concept I generally trade. I'm not going to be teaching you different concepts. Doesn't mean I don't understand other concepts. Okay, so you could learn them and know them, right? Because what you want to do in the market is you want to make informed decision. While we still use the undergraduate studies, while we are in undergraduate, we call something borrowed courses. We call elective courses. We have the major and the minor courses. So the reason why, as an engineering student, when we were in I told you about engineering fields, which means engineering field has different disciplines of engineering, mechanical, electrical, civil, and the likes. But when we are in our 200 level, we are made to go through all the courses in engineering. We did mechanical, we did civil, we did all of we had about 10 faculties of engineering in my school. So we did all the 10 faculty courses in our 200 level. So when we go to 300 level, then we start to narrow down into our courses. So there are some things in mechanical and electrical and all of the other courses that I could tell when I see them, oh, this is from this, is from this. So that is me getting familiar with them, and I could solve problem when I see them. When I see something related to them, I could solve those problems. But then I majored in my own course. That's why we have minor, major, elective, right? So I majored in my own course. So that doesn't mean if I look at the chart and I see something that looks like support and resistance, I can identify or use them to my advantage. Remember, I use smart money concept. Smart money concept, it's a concept, which means concepts are things that you bring together, like different things brought together. It's not smart money strategy. It is not smart money definite strategy. It is a concept, which means something logic, which means you bring different, if it is trend line, you can infuse into smart money that makes it make sense, because we call it smart money. Initially, we call it institutional trading, and now we call it smart money. But now you want to trade it smartly. What will make you trade smartly? So if you have the mental capacity to learn all of these things and understand them to the fullest, it is to your advantage. But if you think narrowing down to one concept will make you, fix. There are some people that will tell me, Brainiac, I don't think I have so much time to learn so many things. There are people like that. Or I am a slow learner. People like a slow learner, you can advise them to learn multiple methods, because even the little one they are learning, they are not getting it so fast. But if you know you have the mental capability to learn them and not in any way cause divisions of knowledge or analysis paralysis, then it's a good thing for you to have an idea of whatever ways will make you profitable. If I'm trading now and I'm looking at smart money concept and it looks like it doesn't make sense, and I call out the setup to my mentee, they will say, Brainiac, how do you get it set up? I'll tell them, not everything looking at smart money concept. There are some things that are just experience that are used in solving them. I think that's explained everything for now. Thank you everyone for having me here.
All right, thank you very much. Thank you. And I think that's a very nice summary and a very nice aspect to add, especially coming from somebody who trades a single method. So I think that will be all into the introduction of technical analysis. Tomorrow we'll be going to the charts. So we just started the interesting stuff. Tomorrow we'll be moving over to the charts with a different guest, and more details will be sent into the community, the private group chat we have for the boot camp, while we make preparation for tomorrow's class. Okay. So good night, everyone. Is there any question? Let me ask that before we go. Is there anybody that is not clear on something that you would like to ask before we head into the official sections on the chart regarding to technical methods? Because tomorrow's guest is going to be focused on teaching you a single method, which is what he understands from his edge. Do you understand? So we are going into that aspect. For you to go into that, you have to have a background insight to how you should understand it. Do not throw away what you have learned because of what you learn tomorrow, but at the same time, do not look down on whatever you're going to learn because of what you have already learned. Just make research and improve your mentality from everything you see. Make research and improve. Don't just accept and conclude. That's what we're trying to say. So anybody have any question before we move on?
If you have questions,
Okay,
you can put down the chat box.
Yes, you can also update that in the chat box. All right, I think that will be all for now. Good night, everyone. I think we can end here.
All right. I'll see you tomorrow, chat. So thank you for participating.